Alright, so this is the fourth week. I have a lot of things to show you. I think at this point, thank you for watching and being part of the journey. And I'm gonna show you the result over just a month of trading. So stay tuned with me. I'm gonna present you the plan of the day, and yeah, let's go to it. So in a moment, I'm gonna share my screen, and you will see what I'm saying. Um, so so the plan of the day is pretty much as usual, just checking the news relative to the SPY. And at 8:30 as usual, again, as I was telling you in the previous video, it's extremely important to be in touch with the news. And in this video, I will more emphasize that you must be in touch with the news, no matter whether those are negative or positive news, because depending on the type of news you are receiving, you may decide to to buy puts or calls based on that. So it's extremely important. So the second point is do some volume analysis, and the volume analysis consists of, in this case, is mostly you are looking at order flow. Do you see a lot of buying orders or selling orders? That will determine potentially which direction the market will will move. Combining that with the moving average, that will give you an estimation of potentially if the move that, let's say that the market start going down and you want to see if the market will keep going down. So using those simple indicators are extremely useful as a beginner, right? So the third one is how to use stop loss and our multiple to refine our trading strategy. So up to this point, we haven't really used stop loss, and so as you can see, every single week I bring up a new tool or some new terms that we could use at our disposal to make sure that we become more experienced trader. And I will show you the entries I made, and today I will show you a concrete example of how you can average down in option trading to make sure that you either break even or come out with some profit. And I will reveal you how much money I made over a month, and some recap. And the last point is to just do some recap and conclusion, right? So something new today, right? So what I do myself, and I definitely encourage everyone watching this video, if you're not doing that already, make sure that you have a calendar every single month in which you add important events that could happen that month, and you circle those days and you make sure that you keep track. Especially my rule of thumb is especially 2 days before that day and 2 days after that day, depending on how important that event is. So 2 days before, 2 or 3 days before, and 2 or 3 days after. Watch extremely carefully what happened. So in the previous week, something that was relatively important. Again, what's happening in the market is that one news, if it's not bad enough or good enough, is usually not sufficient enough to make the market strongly move in one direction. So what you are looking for is a combination of many good news or bad news. So good news, bad news, for example, because we know already that the economy hasn't recovered from from COVID, and we are potentially going to some recession, to a recession. I'm talking about the US economy. So in that case, last week we had the CPI, or the Consumer Price Index data, that was released on Wednesday, May 10. And just to add to your calendar, the next CPI release will be on June 13 of this year. So this is what I want you guys to do. This is an example of, for example, of the calendar that I have just for this video, to show you. This is, for example, a calendar that I use. So you create a calendar like this. If you do want this template, I can share with you. Just leave a comment in the description below. I will leave a link where you can access it. So you put the events, you circle them as it was being circled in this video. So you can see on Wednesday, this is May 2023, and you see on May 10 that we have the CPI data release. that is being circled and shown over there. It's really important. And so let's dig what this news could be important for, has been important for us at least in the previous week. So what is CPI? As I was stating in the previous page, the CPI is the Consumer Price Index. What does it mean? It represents the cost of basket of goods or spendings for the average household. So as a result, it helps measure inflation. So for example, so the CPI in 2022 can be $200, right? What does that CPI is made of? It's made of I was saying goods. So it could be like the housing price, how much we pay for housing, how much you pay for food and beverage, how much you pay for Medicare, how much you paid for recreation, how much you paid for other goods and services, etc. So those are 8 major groups that are being used or could be used to determine that consumer price index, which is basically like the average spending that you do a month. So or year, depend. So why that consumer price index was important, because that demonstrates if the bargaining, let's say the purchase, the buying power of the average American household has increased or decreased. And obviously if they spend more, the economy goes better. I mean, it's good for the economy. They spend less, the economy is don't go as well. So again, the CPI is being used to calculate the inflation. I hope I had that formula. I couldn't find it. Okay, couldn't find it over there, but basically the CPI is being used into calculating the inflation. This is a simple formula. I was hoping that I had this in this video, but I don't have it. I may show you if you needed to. But it's simply you use this is a base year. You use the base year, the CPI of the base year minus the CPI of the current year over the CPI of the current year. So that, and you time that by 100. That will give you the inflation rate. So as we can see, the CPI determines the inflation, and the inflation determines how much of an increase we have of the price of goods. So next, so the stop loss and arm multiple. So again, those are new terms. So the stop loss is the maximum amount you are willing to lose, and in Robinhood you can configure stop loss for option trading, and typically there are two ways to configure the stop loss in for option trading. So you as part of this video, I'm just going to talk about the general term, but definitely have in mind you can configure the stop loss in Robinhood in 2 different ways. One way, you can configure the stop loss in a such manner that if the money drop from the current price to a certain price interval, then it's going to attempt to sell it automatically. So it's going to attempt to sell whatever position you're trying, or contracts you're trying to sell. And understand there are certain rules of thumb you want to if you want to set your stop loss in a good manner and a ideal manner, because what happens sometimes is that when you set your stop loss, it doesn't sell because either your interval that you were trying to attempt to sell is too small. Then when there are certain cases in which it doesn't go through. So that's one of them. I can show you 2 examples, but that I think will go in a different video. So just to keep this video more short and concise, I just wanted to introduce you to this term. So the next term is the R multiple. The R multiple is the measure of the outcome of a trade in terms of risk, and it's an performance matrix. So let's go through an example, right? So the way to grab this concept is simply, so typically in trades we want to measure, for example, the risk and reward ratio. So for example, right, you want to risk at most, for example, losing at most 5% within a trade, and you want to win, let's say ideally 10% in a trade, right? So in that case, the risk reward, what is defined as the risk reward ratio, is 2 to 1. So 2 the profit is twice the loss. It's twice how much you lose. So this is an example, as I was saying, and to demonstrate that 1,000 with $1,000 trade, if you risk at most 5%, that means that you risk at most $50. So if you lose exactly, therefore, if you lose exactly $50, then that R multiple is 1. There are some other example I could bring, but I'm just bringing up terms just to give you an idea about those terms. You are kind of aware of them, but know that the R multiple could have different values, 1, -1. So it really depends on whether you are losing or whether you are winning. So it depends. Oh, so let's talk about the previous trade I made. So some of the previous trade I made. This is the first part 1. So what I want to pay attention to, you can see on my screen on the left side, you see this pay attention, see what is been circled in the red. So in the previous week on May 10, the total return on this particular trade was I was down $354, and you can see the market value I have for the trade, and the what you see in the middle. I want you to pay attention to what is being circled in red. So those are, I bought puts, as you can see. So I bought puts for probably three separate orders. So I bought two contracts at a total of $1,432, and the other contract I bought was $705. And what you see above is the profit. The profit will be the amount that you see over there. So 2,250 minus 705 and then minus $1,432. So the profit is about $113, and you can see the date. It was on Friday, May 12th. So this is one of the trade I did that day, and this is the profits. And on the screen, and then at the right side, you will see one of I think the last trade I did that day. So about, again, two contracts. Those are two different contracts. You can see those contracts are calls, so it's different from the previous one, which were puts. So those calls I made about 87 bucks. So I want you to pay attention to the trade on the left side. I will show you the power of averaging down in a contract example. So the power of averaging down. So as you can see, right, the two contracts which were, I can go back. So it was the SPY 413 calls. So I had two contracts, and you guys can see those two contracts is being stated as buys, two buys. And I want you to pay attention to total return at the end. So you see I've averaged down by buying two different calls, type of calls, and we can see the average down, and is basically reducing the amount of risk I was taking. So this is a way of risk management, and you clearly can see I come out of those two trades, I'm coming a little bit profitable. So the account balance, it's about so I want you to pay attention mostly about the increase and that and the journey that has been this month. So this month we have increased our balance by about moving from 2,000 to $4,303. And as you guys can see, the screenshot has been taken on Friday, and only on Friday, as you guys can see in live, so the value has increased of my portfolio has increased by $215, and there's about two trades I've done that day. that's about the result of those 2 trades. And maybe I've done a couple of trades, but yeah, that's about the 2 trades I've done that day. So quick recap for the day: keep track of the news, always look at, always evaluate the order flow, so the volume, buying orders and selling orders. Use the moving average, to your advantage. Typically I use the 10 days moving average as a default. But you can do some customization to it. And avoid traps. Avoid traps by staying informed, always being on top of news, and make sure that you react appropriately always, and decide only accordingly depending on the sentiment that big investors have about the market. So that was it for the day. Thank you so much for being in this video. I appreciate you watching the video. Leave some comment and feedback, and stay tuned for next week, and you will see all the trades I'll be making. I'm gonna bring you up to speed again and try my best to bring you some informative and good content every week. Thank you guys, and have a good week. Leave a comment on what you want me to post, and thank you for watching.